Today, movie theaters take center stage as Memorial Day weekend brings the biggest box office weekend of the pandemic. And theater chain AMC cashes in on its meme stock status. Plus, the biggest meat producer in the world is the latest victim of a crippling cyber attack, and the company is pointing the finger at Russia. And finally, we're on the ground in Tulsa, where the wealthiest Black community in the country was burned to the ground exactly 100 years ago. I'm Pippa Stevens, and this is CNBC After Hours. Stocks are starting off the month of June largely flat. The three major averages are mixed, but none of them finished even 0.25% in either direction. But that doesn't mean individual names were all flat. Check out shares of AMC Entertainment, the movie theater chain. They popped more than 22% today. Sure, Memorial Day marked the unofficial reopening of the country as many states lifted mask mandates. And the holiday box office raked in more money than any other weekend during the pandemic. But the gains aren't just based on that. AMC raised more than $230 million by selling new shares to investment firm Mudrick Capital Management. The company is taking advantage of its soaring stock price, which was driven about 100% higher last week alone by day traders on Reddit. And it seems like Mudrick took advantage of that as well. According to an afternoon report, the firm sold the entire stake it bought from AMC today, making a hefty profit in the meantime. Kate Rooney can break down AMC's popularity as a meme stock and why the theater chain is cashing in.
Another meme stock rally this morning. AMC shares have been up more than 20% after the movie theater chain says it's doing another capital raise. AMC is selling 8 million shares worth about $230 million through a stock sale to Mudrick Capital Management. AMC says it will use those funds for upgrading its theaters and deleveraging its balance sheet, as well as potential M&A. Shares roughly doubled last week on way higher than normal volume that was helped once again by speculative trading activity driven by Reddit and social media. This morning, it's the most talked about ticker on Reddit again today. That's according to data from ThinkNum. The CEO, Adam Aron, has been embracing this retail frenzy lately. AMC has taken advantage of these price swings a few times this year by selling additional shares to raise cash. The stock is up more than 1,000% year to date. This morning, the CEO tweeting about that fundraise and trying to rally investors. He says, quote, "In our view, this is not mindless dilution, but rather this is a very smart way of raising cash so that we can grow this company." He says, "Watch out, naysayers. AMC is going to play on offense again." And there are plenty of naysayers out there. AMC still has around $5 billion in debt. It needed to defer about $450 million in lease repayments during the pandemic as its theaters were closed. And COVID, of course, has changed the business fundamentally, with more people relying now on streaming. But a bright spot for AMC over Memorial Day weekend, North American box offices brought in nearly $100 million in ticket sales. We think of the meme stock rally as really a January Q1 phenomenon. It's continued. We've seen it this week with GameStop, names like Virgin Galactic, and of course AMC today. The share price roughly doubled last week. There is still clearly momentum. It's unclear if it's all retail investors or if there are some institutional investors sort of jumping on the momentum here and trying to make a quick trade. Most people don't see it as a long-term investment, or the people that are investing in this type of environment when it is running up so much. Analysts, on the other hand, are a little bit more sober about what's going on.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
If you think about taking the best IP in the world, starting with sports IP, together with the more than 80 million fans that we have at Fanatics, we think it's an incredible opportunity to have IP holders connect with, tens of millions or over time, hundreds of millions of fans and create great digital products.
You have some producers wanting to be a little more cautious because they say, yes, the US looks great with, gasoline demand. Europe is reopening, but we have these problems in India with COVID, the third largest oil market for demand. Japan's looking a little bit shaky now with COVID as well. So the question just is, what is the incremental ad that we're going to see?
any studio executive's belief that a movie belongs on streaming, that model's been shattered this weekend with the grosses that you just reported. We had an amazing weekend coming back into the theater. I think that, during the shutdown, people have been locked in their homes and they really have missed that communal experience.
We knew at some point we would have to think about going public, but we wanted to make sure we solidified not only that strategy, but actual results tied to that strategy, which we have. And it was at that point that we then decided to go public. And it was really just a question of what was the right vehicle? Do you do a direct listing? Do you do a regular way IPO? Do you do a SPAC merger IPO? And we obviously chose the path of doing a private investment plus a PIPE and a SPAC all combined in one. And we're really happy with the choice that we've made.
A century ago this week, the wealthiest Black community in the United States was burned to the ground. In 1921, a mob destroyed the Greenwood district of Tulsa, Oklahoma, which earned a reputation as America's Black Wall Street, in one of the worst racial massacres in the country's history. Actively covered up for decades, the Tulsa massacre directly led to a decline in home ownership and occupational status for the city's Black citizens, illustrating the destruction of generational wealth in the community. In the wake of last year's police killing of George Floyd, there's been a new push by financial sector companies to create more Black businesses. Frank Holland is on the ground in Tulsa with that story.
More than $1 billion has been invested or donated by U.S. financial companies in 2021 alone to create, support, or provide capital to Black-owned businesses, as well as addressing the racial wealth gap and other social and economic inequalities. The $350 million commitment by J.P. Morgan, the largest, some of that money going to Black women-owned businesses, some also to Black-owned banks. Black businesses were disproportionately impacted by COVID-19. At the height of the pandemic, 41% closed compared to just 17% of white-owned businesses. Operation Hope received a $20 million investment from Truist this year. They also launched a $130 million investment with Shopify in 2020 to launch 1 million Black businesses over the next decade. Founder and CEO John Hope Bryant says 96% of Black-owned businesses only have one employee, the owner. He believes these investments have the potential to create jobs, which would benefit the broader economy.
Those employees are paying their mortgages, paying for car notes, paying for school fees, paying for gas at the gas station, going to restaurants. The ripple effect in the neighborhood is obvious, relevant, and significant.
The racial wealth gap is conservatively $11 trillion. According to new research from Duke University, it could be as high as $13.5 trillion. McKinsey estimates real GDP would increase up to 6% if that gap was closed by 2028, creating a per capita increase of as much as $4,300 per person. Now, just to put that in perspective, even if annual inflation was around 3%, remember we saw 3% inflation back in April, the spending power of that per capita increase would be more in 2028 than all the rounds of stimulus combined today.
Okay, let's get to today's numbers round. We'll start with 5.9. In 2020, Amazon warehouse employees experienced on-the-job injuries at a higher rate than other companies, according to data from the Occupational Safety and Health Administration, or OSHA, that was compiled by the Washington Post. Last year, Amazon reported 5.9 serious incidents per 100 full-time employees. For comparison, Amazon competitor Walmart reported less than half that amount, 2.5 cases for 100 workers, and Walmart employs more people. And while there's no official details accompanying this data, sources ranging from former OSHA officials to union reps to Amazon workers themselves told the Post that Amazon's unrelenting productivity pressures were to blame. Next, 15. JBS, the world's largest meat producer with operations in 15 countries, has fallen victim to an organized cyber attack, prompting shutdowns at some of the company's plants in Australia and North America. JBS said in a statement yesterday that it is actively looking to restore systems as soon as possible. And today, the White House said the company believes Russia is the source of the attack and the FBI is investigating. JBS is the biggest beef producer in the U.S., accounting for nearly a quarter of the nation's beef supply. Meat is the latest commodity to be targeted by cyber criminals. Last month, the largest fuel pipeline in the country was taken offline after its computer systems were locked by a ransomware attack. And finally, 35. Bitcoin tanked 35% in a turbulent monthly performance, easily turning May into the flagship cryptocurrency's worst month of the year. The losses mark a bit of a speed bump for crypto's meteoric rise over the winter, when Bitcoin surged more than 200% from December to March. Contributing to May's volatility were regulatory moves from both Chinese and U.S. authorities to tighten tax compliance on cryptocurrency transactions and trading, along with Tesla CEO Elon Musk suspending the car maker's Bitcoin payment policy, citing environmental concerns with the mining process. But listen, even though Bitcoin has tumbled lately, it's still up close to 100% in 6 months and 285% over the past year. Dive into all our crypto coverage by going to CNBC.com and downloading the CNBC app. That's it for After Hours. We'll be back here in our home office every Tuesday and Thursday, so be sure to catch us then.